Hello, hello. This is your host, Sheraz Ahmed, ready to kick off another bite-sized episode of the Crypto Valley Association podcast. A special thank you to Bank for supporting this initiative as they pursue their mission to redefine finance for the new economy. Now let's discover together the growing trends of this fast-moving space and try to shed some light on the mysteries it contains. Today, we're joined by Iana Dimitrova, Chief Executive of OpenPayd, a leading global payments and banking as a service platform that provides a range of banking and payment services to both financial and non-financial institutions. So let's dive straight in and uncover the hidden world of banking. Hello, Iana, how are you doing today?
Hi, Sheraz. Great to be here, and thank you for having me in OpenPayd. Very well. How are you today?
Great, thank you. It's a pleasure to have you. And maybe we start this off as we usually do by hearing a little bit about your first blockchain related experience.
That's an interesting question. And you know, I would go very humbly into that question because most, I guess, of your audience is far more familiar with the space than myself, simply because I come from a very traditional background in terms of being a lawyer and then having spent my last 10 years in highly regulated financial services and payment space. So actually my first touch points with the blockchain technology and overall new virtual currencies and new ways of moving money around was when we actually started getting demand at OpenPayd from those people that have these new great ideas about moving money around, but needed access to traditional payments and financial services. So for me, that was really the very first time.
Wonderful. And may I ask when you started hearing about some of these interesting ideas that these people were having?
I think that was probably around 4 or 5 years ago, when it was still really something that people were not yet ready to accept and explore as mainstream. So I guess many of those businesses were just seen as an idea or a business or a way of moving on the side that is not necessarily mainstream. And I guess what we are seeing from our perspective, which is the perspective of moving funds around in the traditional ways, that has really massively grown over the last, I'd say, three years, and the potential is growing exponentially day by day.
Okay, great. I see. And so I'm very curious, could you tell us a little bit more about OpenPayd and some of the services that you're providing?
Yeah, very, very happy to. I mean, we like to think about ourselves as the provider of payments and banking services for the digital economy. We have, I would say, a unique combination of licenses and license coverage across multiple countries, as well as technology, which is agile enough and corresponds to the needs of the digital economy. So I guess what we do is we aggregate multiple payment methods and different payment schemes, and we help our customers that trade digitally and need to move money cross-border and accept payments through different payment methods and channels in multiple countries through a single API, through a single point of contact.
Okay, incredible. And identify some of your use cases being embedded finance, FX and remittances, marketplaces and platforms, and now newly digital assets. What really brought you to kind of bringing this as one of the new use cases?
Absolutely. So I guess we are heavily focused on helping customers, both from the financial services space, but also from the virtual trading platforms, to move money around. And I guess the reason why we have gone in that direction, and that's not necessarily a new direction for us, is purely organic. It's purely the demand that we have been getting from all of those businesses that have the need to bring money into their system, bring fiat payments into their system, and have both the on and off ramp functionalities in multiple countries, in multiple currencies, and have all of that 24/7 and fully instant. So with the growth of that vertical of the digital economy, the demand for those integrated payments and banking solutions has only been growing. And in a way, what we do is our product development, and our platform simply follows the demand of our customers and their consumers respectively.
Okay, thank you. And one of the common terms that we hear quite often in the cryptocurrency and blockchain space is kind of buy banks, buy Bitcoin, and we're just following along these lines. I mean, how do you believe the banking world as a whole is going to, let's say, transform with regards to this, whereby you have a lot of, let's say, the decentralized finance world that has come about, and a lot of people that are taking out loans in a decentralized manner, not needing, let's say, a banking infrastructure. How do you believe things are going to be moving forward with regards to this?
That's a really interesting question. I think one has to be very carefully making predictions about the future, because had you asked me that question 4 years ago, I would have probably said that there will be some form of uptake, but the impact is going to be limited. And also the number of banks and the appetite of traditional banks supporting those businesses will also be limited. I think we have seen an incredible evolution over the last 24 months, and that trend is something that both traditional financial institutions and regulators are now recognizing. So from my perspective, I think that that market, and I guess the ways of exchanging wealth and data, is still to a large extent untapped, and we're still at its infancy. My view is that it is inevitable that some form of regulation will have to follow if the development of those alternatives is to grow. But I think what's going to be very important for that future growth is to strike really the right balance between the two. And I know that there are many opponents to any form of regulation, saying that would defy the whole purpose of the blockchain technology as such, and the concept of decentralized finance. But equally, I think that as we progress, putting the protection in a way of the customer, whilst I would say safeguarding, all of the benefits that the technology is permitting, is going to be inevitable. So I think it's really reconciling those two agendas, which is no easy exercise, but in my mind, it is absolutely inevitable.
I see. Thank you. Very, very insightful. And you touched upon a very interesting point as well, your background being kind of the legal and regulatory side of things. Where do you believe the kind of that aspect, the regulatory side is headed? I know that OpenPayd is based out of London, and now, well, the UK no longer being a part of the European Union, but understanding how do you believe these kind of the regulatory side will adapt to this growing technology?
Yeah, that's really a great question. I think there are different ways of looking at it. First of all, generally, how is regulation going to adapt and follow those developments? Because they're in a way now, regulators are on the back foot, and they have to follow the developments. But also then there will be a question of whether there is going to be a different approach in between the UK and in Europe. I think overall regulation is going to come, and the question is, do we have to now regulate everything that when it comes to the blockchain technology or to trading virtual currencies, or only certain products and services that pose a higher risk to the customer? And because I think what we see in terms of, say, a lot of the bad press about some crypto providers out there, it's not really related to 90% of the products and services that they offer to the mass consumer. It is related to a very small portion of products that are somewhat investment products that come with a much higher financial risk to the customer, or much higher compliance risk, or money laundering risk. But I guess it's really around striking that balance and making sure that the regulators are not imposing a one-size-fits-all approach to anything and everything offered, for example, by a crypto exchange, but they always place the emphasis on the key risks. And those key risks might be, of course, from a money laundering standpoint, or consumer and financial risk, protection from financial risk. So I think it's having that measured approach and analysis on a case by case and product by product basis, instead of a catch-all regulation on crypto exchanges, by way of example.
I see. And are there any jurisdictions that you're currently looking at that are really not only at the forefront of this, or are kind of regulating the space, or looking to regulate the space through sandboxes, or the likes, in a positive way, or in a way that you see best fit? I mean, we've seen a lot. I mean, I'd probably be a little bit biased here, even though I'm supposed to be neutral from coming from Switzerland, but I feel like the Swiss approach is quite interesting. We've seen also Malta, Singapore, and other countries. I mean, any specific jurisdiction that you've looked at and you're like, wow, they're doing it in the right way?
Yeah, no, absolutely. I think you're absolutely right. I think the approach in Switzerland is a very pragmatic one. I think when it comes to Malta, for example, and a couple of other European jurisdictions, they 2, 3 years ago, seeing the potential of the industry, they made the statement that they want to be the hub, they want to be the home jurisdiction of those new business model. However, some, I'd say, were far more successful than others. And I think the comparison that you're giving in between Switzerland and Malta is an excellent one, because Malta tried to be that hub, but then effectively the process, for a number of reasons, of course, internal and external, slowed down. So if you look at the number of providers operating out of that jurisdiction, it's very limited in comparison to, for example, Switzerland. I still believe, and maybe I'm biased on my end, that the UK as a jurisdiction and the FCA as a regulator are very open to business. It's one of the most, if not the most skilled regulator and experienced regulator out there. And they always take a very pragmatic and open dialogue approach, whether it's through the sandbox environment or other, when it comes to those crypto businesses. And I think we see that approach validated through the sheer number of applications and companies that are still operating out of the UK under the current temporary permissions regime, and also the, I guess, proactive approach that the FCA is currently taking towards reviewing all of those applications and making sure that they can continue to operate in a sustainable manner out of that jurisdiction.
Yeah, I see. I mean, thank you. Being let's say British born, it's very refreshing to see someone being so positive about it. Thank you for bringing some light back to the space. And if I follow a little bit on those tracks, and go down the line of some of the challenges in the past, that I would say, not only myself, but I think other crypto enthusiasts have getting in space a few years ago. Maybe now it's a little bit easier, but the kind of whole element of kind of like fiat to crypto, on ramp and off ramp, it's always been a problem going from the new world to the traditional world. I mean, how are you looking to solve this problem? And is it a challenge that's now completely solved, or is there still strides and steps to make?
Absolutely not solved. I'd say that this is a challenge that everyone in this space, or trying to get in this space, is facing. So this is really where we are the experts, and that's why I guess we like to see ourselves as the go-to infrastructure provider for those new businesses and those growing companies that are struggling to get the level of support that they require for their business types from traditional banks. I think what is really important is to have a combination of two things in order to solve those challenges. On the one hand, it is to have the regulatory infrastructure in place in terms of licenses, but also in-house knowledge and expertise when it comes to that sector, so that we as a financial institution can effectively assess the business model as well as the risks associated with that business model. And I know that that may sound like a very straightforward exercise, but if you were to go to a tier one traditional bank, probably that level of knowledge and understanding of the variations would not necessarily be there. And this is why very often there is a blanket no approach. And also because the in-house expertise is not there, I guess the return reward versus the initial investment in assessment is just not justifying the risks for many of those players. Whereas we have been building this very steadily throughout the years, and we're now in a position whereby we can assess very quickly any new business model that is coming to us and make a very quick decision as to what has to be captured or mitigated as a risk, discard or proceed forward. So So that infrastructure is incredibly important on one hand, and on the other hand, it is really the technology that is fit for purpose for the instant 24/7 trading cycle that is required and that the customers of those platforms are expecting. So I think combining the two is something that is quite unique in the marketplace, and that is why companies are still to a large extent struggling to have efficient link and bridge between the fiat world and the crypto world.
Okay, I see. And I guess in order to educate, there is a certain need to communicate, and at least for the time being, you serve a little bit as an intermediary here between, let's say, this new world and the traditional world being, let's say, the banks. How do you kind
Absolutely.
of
And maybe if I might just interject here, it is a lot about communication and, frankly, I would say at times education, especially from some of the platforms that don't necessarily come from a European background and regulated environment. Because for those that have been set up in Europe, many of the guys are actually coming previously from either payment services or other form of financial services. So the touch points with regulation and I guess the restrictions and the compliance requirements are not foreign concepts to them. So it's just about investing and building the right infrastructure. But for those players that are coming from outside of the UK and Europe and have been extremely successful in other parts of the world without facing that level of compliance requirements and scrutiny, it is really an exercise of hand holding and explaining the process end to end. And this is really where we like to think we're adding value to the growth journey of our customers and partners.
I see. Thank you so much for the additional comment there. And I think maybe one of the thoughts on a lot of our audience mind now is, since you do a lot of this communication with the traditional world, with the banks, what are some of the key points that you raise to them in order to start some of these kind of, let's say, relationships, collaborations with some of the new world? What are some of the key points that you not only to convince them, but that kind of pique their ears and interest in this new space?
You mean with the traditional on the banking side of things or on the customer side of things?
On the banking side, in terms of how do you get them engaged in this world?
Yeah, I think it's not really not just about the banks. I think it's also about our own regulators as well, because it all really starts with, I guess, ensuring that by facilitating those payments and offering regulated financial services, we do this in a fully compliant manner. So I think it really starts with having our own infrastructure and very strong in-house expertise, and then making sure that the businesses, the companies that we work with and help grow are in a position to and willing to invest themselves in, I guess, compliance. And by the way, when I say compliance, this is very often really upgrading their technology. It's not just adding more people or adding more manual processes. I think we really need to stop thinking for compliance as a tick box exercise, because what we are seeing more and more is that investment in the right skill sets, but also investment in technology helps manage those businesses their own risks far more efficiently and ultimately help them grow. So I think it's really giving comfort to the regulators as well as to banking partners that we are carefully selecting the businesses that we work with, and we expect them to meet a very high standard, a very high threshold of technology and, I guess, compliance knowledge and expertise.
Well, thank you. I think it's a very interesting point there. And I mean, as we're slowly approaching the end, unfortunately, of this very vivid episode, I'd love to hear a little bit more about where you believe this space, not only the blockchain one, but the fintech space is heading. And I mean, we spoke a little bit about it before. It's difficult to make predictions and projections, but what are your thoughts?
You know, we've seen a real shift in demand for financial products over the last 2 years. It was, I guess, originally the demand for API banking was mostly coming from industries that are used to trading digitally, whether that's, crypto trading platforms or other financial services companies. Whereas now we are seeing that industries and business models that traditionally didn't have a digital delivery channel or touch point with their consumers, say automobile manufacturing is a great example, are coming to us and are saying, we want API banking. We now want to be able to reach our customers digitally. We want a fully integrated payments experience. And you know what, by the way, we would also love the ability to integrate some of your banking or payments products into our own product set so that we can generate some revenue out of it. And actually, a very recent study that we did with close to 200 executives over the UK and Europe, the vast majority, and I think it was over 75%, are saying, yes, we actually expect to be generating some revenue over the next 5 years from some sort of embedded financial product. That might be insurance, it might be lending, it might be core banking, bank accounts, but we're actually planning to do this. So what we're seeing right now is a significant demand for infrastructure. And this is really where we focus so that we can then help those customers start generating revenue from financial services. So to me, the shift, to answer your question, is towards more and more, ever more fully integrated and embedded movement of money and data, so that the business, any business, can have as much traction and touch points with their consumer as possible.
Okay, wonderful. Well, thank you, Iana, so much for joining us today and providing all these insights. Before we let you go, I mean, do you have any final words for our listeners today?
No, it's great to be here. I think for us, it's a really exciting time to be within that financial services space and to be the go-to person and platform that bridges the traditional world to the virtual assets world. So thank you for having me. It's a pleasure.
Pleasure is all ours, and incredible last words. And to the audience today, if you enjoyed this conversation, feel free to check out more on our website, cryptovalley.swiss, where we host plenty of events, educational material, and even provide information on how you can join our growing community. Thanks again, Iana, for joining us.
Thank you so much for having me.
Stay tuned, stay safe, and until next time from the Crypto Valley in Switzerland. Bye-bye.